Today, I am excited to welcome Peter Knight from Franchise Accounting and Tax. As a franchise specialist in Australia, you've helped many businesses thrive in this environment. And today, we're going to be chatting about industry trends, challenges, and your approach to success when working with clients. So let's dive in.
That's great. Thanks, Teresa. Great to be here, and thanks for the invitation.
Oh, you're welcome.
Yeah, a couple of things that we've seen over the last maybe 6 months, maybe even up to 12 months, but definitely a trend that we're seeing come through is a move away from the very expensive, high-cost franchises.
Yeah.
We're seeing this real popularity now of, if I call them agile or smaller and mobile type of franchise. Where it's affordable to people, where they don't have to mortgage their home. They may need a van, and so they can get finance against the vehicle itself. They'll get themselves in to the business and get it going. So that seems to be the people who are looking to buy a franchise
Mhm.
want this ability so it's affordable. It's not going to give them a massive financial cost to
Yeah.
get involved.
And
We're seeing,
how, at that level, how easy is it for franchisees to get the money to borrow?
yeah, very easy because the significant cost, they're not being hit with that.
Yeah.
It's interesting on the timing.
Hmm.
If we just say we're talking about a guy or young lady or a lady who wants a vehicle,
Hmm.
yeah, and they're thinking of getting a vehicle for their franchise, and they've got a job, but they're thinking of going from their job to becoming
Yeah.
a franchise owner. If they're going to get finance, it's better to get the finance while they've still got the job,
Right.
because the financier is going to say, can you show me a pay slip
Yeah.
or the last three pay slips?
Mm.
And so then you can show that you've got the pay slips, you'll get the finance organized, get the vehicle, get things in place, and then it's okay to make the move
Oh,
because you've
that's a
got,
great point. Great advice. So franchisors engaging with potential franchisees should absolutely be giving them that advice.
have a think about that.
Yeah.
Yeah, definitely.
Right.
One of one of the things for small businesses or businesses that are thinking of going down the franchising track, we get phone calls every week saying, "Oh, I'm thinking about it." The question we have to come back to straight away is number one. Number one is this: do you have a proven business model that works? Because it's got to be working. Uh,
100%.
we've seen some people that have said, "Oh, I'm in a bit of financial strife. The answer to all my problems is to franchise."
Yeah.
That's a train wreck waiting to happen.
I have those phone calls as well. Those are usually fairly short phone calls.
Fairly short. If it's not working, franchising is not the answer.
Yeah.
It's not a gold mine to
Yeah.
just solve all your cash flow problems.
Yeah.
We need to have a business model that works
Yeah.
and is proven. And if you can, doesn't always, it's not always the case. If you can show that the model can work in two or three locations already before you franchise, that's even better. We want the
Yeah.
business to be able to operate without you having to run it.
Mm.
That means necessarily some thought has had to be, you've gone through a whole thought process to
Mm.
get the business not dependent on you as the owner.
Yeah.
You've put systems in place, management systems in place that it can work in one, two, or independent of you. I mean, even to do that anyway, even apart from franchising, that's allowing you the first step to freedom, stepping away from the business where you don't have to be involved in every decision at every location. It's too much. Three businesses is almost the test. If you can run your business in three separate locations, that will mean that it's not dependent on you, because physically you can't be in all those three places at the same time.
Mm. And so if we look at just to clarify that point, if we're looking at a trades or service-based business that's mobile, it's the base is out of a
Yeah.
service vehicle, is so if they've got one or two vehicles out on the road, that would fall into that sort of criteria that you've just mentioned.
Yeah.
Yeah. Yeah.
That, yep, that'd be spot on. If you've got two or three,
Yeah. Look,
that absolutely is a great case. If
Yeah.
you've got two or three that are operating because you're not in all three at the same time, that's a great
Yes.
example. Yep, that would definitely work.
Yeah. Yeah.
Probably the other thing from an accountant's perspective, we'd want to make sure is that it's that each operation is actually running in profit, that it's profitable business.
Yeah.
Running at a loss, you're not going to make it up on the volume. It's a good saying. Each business unit needs to be running profitably.
Yeah.
Now, there's just staying with the financial aspects, just tick there. Making a profit also needs to be able to convert to cash, that you've got cash flow.
Mm.
And so if, for instance, you're raising invoices, you want to make sure that the invoices are getting paid.
Mm.
The job's not complete until that invoice is paid.
100%.
And that applies to any certainly a small business, man in a van type thing,
Yeah.
up to the big businesses. Got a guy that's now, he started as a small business. He's now doing over 4 million. So he's a big business, and he's got a massive amount in unpaid bills, unpaid debts.
Yeah.
And it's a nightmare for the bookkeeper because most of his invoices are for $225. And so in his bank account, he's got 225, 225, 225, 225. Because people they don't know the invoice number or their name or their remittance. It's just impossible to reconcile.
Yeah. And look,
So
another,
that means talking to
that,
you, making sure.
yeah, sorry, I was just going to say that also comes back to those systems. Franchisees are joining your network because they want you to tell them how to manage cash flow as well as operate this business successfully. So you have to, master that yourself, really. And I mean, obviously, you're going to get a percentage of bad debtors, but at the end of the day, it should be very manageable, and you should be able to pass on those strategies and processes to franchisees to help
Yeah.
them manage that.
Yeah.
Yeah.
The franchisees will be looking to your system to make sure that it works.
Yeah.
And that's when we talk about a proven business model. That would be one example that it's, I mean, that's really important. To be able to send out an invoice, easy. To get it paid and be able to identify that was that particular invoice, that's the key.
Yeah.
And so to me, that comes down to the systems that you'd be looking to put in place, working with them.
Yeah. And look, also being, we'll work with businesses that will have long-term relationships with clients, and sometimes they'll those invoices or whatever will run into 30, 60 days, but they know that those are going to get paid. But for a franchisee operating and starting out, they shouldn't be carrying debtors like that. So they should be, if the client's not paid or they've gone past a certain period of time, then service has to be paused. They can't continue to deliver the services when the previous work hasn't been paid for yet. And that's another big thing is you're not a charity. Yeah.
No, spot on. It really leads to an important point, I think, for the franchisee who's coming on board, and if they're a trade or a service, particularly if they're leaving a job. So they've got the job, they had the pay slips that paid for the vehicle that they're now out on the road. There's a period of time, probably that first 30 or 60 days, that first 1 or 2 months when they're in business, they may not have as much income coming into them as they did when they had a job.
Yes.
Certainly money for their super, and these are really important considerations. And sounding like an accountant, this really means that either a business owner or the new franchisee needs to have some savings or a buffer to get them through those first, I'd like to say, 3 to 6 months.
Yeah.
If there was no income. So do you have enough savings, or do you have a redraw facility on your home loan, or can you take a smaller mortgage? Even though we're talking about lower cost, you've still got to exist for the first 3 to 6 months till the income from that business kicks in, that you've got enough to live on. I think it's a really important point, and something that when we talk to a lot of people who are looking to buy a business and they get all excited about it and they just fall in love, and no matter what you say, they're going to get this thing.
Yeah.
And that can end in tears if they don't have enough money because they're still got to pay the rent or the mortgage. they've got mouths to feed, they might have school fees. These are factors that are very important and really encourage people to think through carefully for a
Yeah, and
business.
that's
And there's a
yeah.
way of working it out. It's a scaled down cash flow forecast. So what do we know each month? We can set this out on a spreadsheet. What's your costs that you know you've got to spend money on each month? That'll be your rent or your mortgage, how much for groceries, how much for school fees, how much for the car loan repayment. You can work that out. And so then you know how much you have to get in. You've got to collect in those first months to cover those expenses. And if in discussion then with the franchisor, you work out what you expect your income to be. If it's short, that's okay because you'll catch it up, or you want to make sure you'll catch that up. But that'll be a bit of a shortfall. You can add that up then over those first few months then to make sure that you've got that much buffer, either in savings or the ability to have a redraw on your home loan to cover your way through.
Yeah.
It's not too complicated to do. And most people used to doing a home budget, you can work this one out. We can work with you on that one.
Yeah, and look, we that is a conversation franchisors need to have, with prospective franchisees. And part of what we create, and which sounds just what you do as well, is we'll create a business simulator which will show them what the potential is of the business from the first month, and shows that there's a period of ramping up, and these are going to be the costs, and then the franchisee will have to factor in all of their own costs into that scenario as well, to be able to see when they could potentially, be, I guess covering their wage that they no longer have. So, but it's a super important part of that recruitment process, is making sure the franchisee has all of the facts. Because the last thing a franchisor wants is for a franchisee to fall over.
Absolutely. No, it's no good for anybody.
No.
And so that ramp up period, it doesn't go forever. No. But there was a guy that I worked with who was not franchising. There's a funny story. I'll be quick. His business was commercial air conditioning. It was a very long time till he got paid. He had to put the air conditioning structure in at the start of the building, but he didn't get paid till the end when the building was complete. So sometimes he was out for 9 months, 12 months waiting for his debt. So this guy went and bought a pizza franchise to get some cash flow to help him get through. So it's a really important one to
think.
Did
that all turn out well?
Yeah, no tears.
Wow.
He put on a bit of weight eating so many pizzas, though.
So was he at least covering the cost of the units up front? So it was just his labour that he was waiting on?
Sometimes.
Oh my God.
Yeah, no, it was one of those ones.
Geez, you have to have some strong nerves.
Yeah, it was okay. And they had some retention as well sometimes. So it was a bit of mixing a couple of different concepts there together.
Yeah.
So it really comes down to having that cash flow forecast for the franchisee.
Yes.
And it's a good idea for the business owner who's looking to go to franchise their business, they'll think about their own business. But at the same time, if you're thinking to franchise, you've got to think of your own business, but at the same time, you've got to think of the franchisee's business.
Yes. Yeah.
So it's a bit weird to start with because you're thinking of two sides of the equation at the same time.
Yeah.
And so to understand, make sure your business works and is profitable. And at the same time, why would somebody buy it? Is because they're going to make some profit out of it.
Yeah.
So they'll be relying on your systems to help them do that.
Yeah.
And most important questions we hear from new franchisees coming in is this: where will I get my customers from? Where do I get my customers? And so that comes down to big brush, broad, I should say, marketing by the brand, but also then the local area marketing that franchisee will do in their own territory.
Yeah.
That's something that the business owner needs to help and think through that they can help that as well.
Yeah. And look, and that's 100% accurate. What we find, because we obviously work with quite a high percentage of trades and service businesses, that they're actually going down the franchising route because they can't keep up with demand. So they've got work sitting there waiting for existing franchises.
Absolutely.
Yeah. And that's such a common catalyst for franchising, because they can't recruit the talent that they need. And then they're trying to retain them, competing with the big companies that are paying more. There's career progression, all those things. So franchising offers some pretty strong solutions to that. So yeah, a lot of them have the work sitting there waiting that they're turning away. So, which is obviously a start for a franchisee.
Yeah, and so they're turning work away because they can't fulfill or deliver on that promise.
Yeah.
And so they turn it down. So they've got the leads coming in, so they actually need people to do arms and legs to do that work. That's perfect.
Very, very, very common scenario when we talk to trades and service businesses is that's what they're looking to do, and they can't recruit qualified talent. It's such a hard thing at the moment.
And so frustrating for those people that have built their business, because the golden rule is, if ever you're asked to do a job, the answer is yes, of course we'll do the job.
100%.
And then you have to find out how to do it. If you haven't got the arms and legs, you need someone.
I always call that having the oh shit moment later.
Yeah, we'll deal with that one. And so having the franchisees come in, they've got skin in the game.
Yeah.
And so it's their business that they're building. And so if you're feeding out leads to them, that's just answers that big question.
Yeah, that's right. Excellent. Okay. And just, is there one major bit of advice that you could give a business owner considering growth, maybe not even just franchising, but growth in general? What should they be doing?
It comes down to one thing. Well, this first step to freedom: make your business repeatable.
Yeah.
Is it replicable? Can it be done again and again without being dependent on you?
Yes.
And that comes down to systems and process.
It does. Yeah, absolutely. Fantastic. Thank you so much, Peter. That was really helpful.